It's been a little challenging, so to speak, for our markets as well. What got handed over from last week as a very, very range-bound session, it finally turned quite volatile yesterday.
So the first time, Aisha, you can say that markets were showing signs of crack. And you are now going below what are these key levels right now. Up until now, the template of the market was buy, stay with the market, chase, buy high and sell higher, which is that the dips were also not coming. So you were selling the market or you were chasing the market. Then came the template of buy the dip. Today, the real template of buy the dip would be tested because you are at that juncture at the point where a little bit of crack in the template in the near term of the market for the Nifty could change. So I'm not saying it's a turning point. All I'm saying is that for next 2 or 3 days, this market will directionally tell you that whether there is strength at lower levels or this whole idea of peak of good news, which we've been talking about, that peak of good news actually has translated into reality. The problem is that flows are decent, but the supply seems to be the dominant aspect. From promoters to PE investors to the IPO market, whatever fresh money is coming into the market now, supply perhaps seems to be more. And we've been talking about the Indigo block deal. We spoke about what happened with the ITC block deal. Today there are 3-4 block deals, couple of IPOs which have started again. So you always have this equilibrium which is getting tested. And then if that was not enough, the FI flows have also become patchy. So I wouldn't say there is bad news, there is gloom or doom out there. But yeah, that mojo, if I may use the word, I don't want to use the word momentum because momentum clearly is not there. But the mojo which markets had in the month of May, I think seems to be fading away.
Yeah.
Quickly mention Asia. Why? Because gold is down, yields are not behaving themselves, but Nifty seems to be indicating that we are in for a flat start. Now that flat start is coming at a time when the dollar index is below 100, VIX is below 20, and yields are at 4.5. So it's like this 3 template plate which I always look at in the morning to understand. Higher VIX means more volatility. Yields below 5, I think markets will digest it. Dollar, as long as it stays between 100 and 203, I think it's measurable. So from a global standpoint, barring a news here, news there, there is nothing which could be called as a bearish narrative which could really bite the market. So let's talk to...
If you like this video, then like, share and subscribe to ET Now.